Hi everyone, it's Susie here. I found this quite interesting. This was a survey done by Global Crypto User Index, and they looked at the crypto user profiles, attitudes and motivations, and I just thought it'd be interesting just to have a look at what sort of people are in crypto. So it basically says who are the crypto users, what are their motivations, how do crypto users around the world compare, who do crypto users trust, what do they use, what do they buy, how do they store it, can crypto adoption meet its expectations, and perceptions on crypto adoption. So I found this pretty interesting, I have to say, and they looked at mainly retail investors and essentially, looked at, tells you about the methodology. They looked at 61,000 crypto users across 178 countries and regions between the period 15th September to 25th of October 2020. So it's quite recent, and I think it'll be interesting to see what it says. So the key findings were, let's just make this a little bit smaller so we can see everything. The key findings were 52% of cryptocurrency owners do not consider crypto as a hobby but a source of income. 50% of users use crypto as their primary source of income. Reasons to buy crypto. Most people, 55%, own crypto as a part of a long-term investment strategy. Other reasons are distrust of the current financial system, 38%, and short-term trading opportunities. So we basically have an investment portfolio which we hold for 2 to 5 years, and we have a trading portfolio which we might hold for 2 days, for 24 days or 4 hours, to maybe 2 weeks, depending. But it's like a swing trading trading portfolio, so very, very short term, less than 6 months generally. Also, it's their purchase behavior. 65% of them most of them own Bitcoin, and then 30% of them allocate between different cryptos, for example. And they exclusively fund their crypto with disposable income, which I think is interesting. They don't borrow any money for this. And there 4 times as many people regretted their decision not to purchase crypto versus the people who regretted buying. So people, there's this big FOMO thing going on. So people actually regret if they don't buy their crypto in time. There's big FOMO going on. And exchanges, most customers value security, 28%, followed by UX, 25%, and available trading pairs. As 60% of cryptocurrency owners store their assets on exchange, security is their most important consideration. Now, we know that people shouldn't store their crypto on the exchange, depending on the exchange. It's all right if it's Binance and they've got 44 million clients and they're well capitalized and they've got lots of money, or Coinbase. But if it's a small exchange like Bitrue or something like that, I would not store my crypto on Bitrue. They've already had a hack. In 2019, they had a $5 million hack, or was it 2020? And it's only a relatively new exchange, and I would not leave my crypto on small exchanges with small client bases that are undercapitalized. No way in the world. Just have a glass of water. So you've got to remember, if you leave your crypto on the exchange, it's a hot wallet, okay, on the exchange, and it can be lifted. Exchanges get hacked all the time. The good thing is with the big exchanges, Gemini, Binance, Coinbase, they're basically, Gemini and Coinbase are registered with the SEC, plus they're insured, and they have a guaranteed fund that if you lose your crypto, you get paid back, and also so does Binance, okay? They're insured Lloyd's Insurance, and you also get your money back if you lose money in Binance, okay? There's a fund, and they'll pay you out, which is a good story. But the small exchanges won't do that, and they're way too risky, and you don't want to be trading crypto on one exchange. Very, very risky, because it means the price maker is only one exchange, and they can basically make the price anywhere they see. And this is why I don't like some of the Uniswap exchanges, okay? The so-called decentralized exchanges, because the particular crypto may be nowhere else, okay? And you don't even know where the real price is. If it gets delisted off that exchange, you don't have a market. You want to be in coins and tokens where there's a liquid market, okay? And that's a fact. So we're quickly going to go through this report. There's a bit here. But key findings, 17 out of the 20 markets have less than 50% trust in the local institutions. When comparing the two concepts each against each other, institutional trust outweighs confidence in crypto. Well, that's interesting. Most cryptos, 39% are bought and hodled, and other use cases such as staking and lending, 22%, and payments, 11%. People use crypto as a medium of exchange, but also as an investment. DeFi is very popular in Southeast Asia, where more than 52% of people use apps, which is interesting actually. And 66% of all DApps users were using DeFi applications. Now, if that's the case, Tron is very, very cheap. VeChain and Tron are extremely cheap. Tron has a lot of DApps, and they're going to DeFi as well, okay? And 0.03 cents, they are super, super cheap, and they're well known in Asia, okay? And they're building all the time. Given what they do, they're super cheap if that's the case, super cheap. There's a unanimous confidence in crypto, 97%, against, stable coins. They're talking about perceived risk and greater false risk and this sort of business. Now, stable coins, you don't want to be in stable coins. You've got no upside risk whatsoever, but you've got downside risk. So do not invest in stable coins. It's a misnomer. They're not stable. The index is against an underlying, which could be going down. They're not stable, okay? And that's a fact. So we'll quickly go through this. Who are the owners of crypto? Well, we find the owners of crypto, do they have skin in the game? Most people do. Most people do own crypto that are in crypto, clearly. And it says here, crypto natives, 13% of crypto users must demonstrate the following characteristics. That sort of thing. And then they're talking about the remainder fall under the 87% bracket. That's not very clear. They say predominantly crypto is male dominated, and that doesn't surprise me. It just is. And, by very young males. You'll see that 95% are predominantly male, and the 5% are women. And they, surprisingly enough, the average age is about 34 years, and they basically only earn $25,000 a year, which is quite surprising, I have to say. So it's very surprising that it's predominantly male, and well, it's not really, but as I said, and they only earn 25% a year, and most of them don't really have an undergraduate degree. So it's under 41% that have an undergraduate degree. And only 45% are employed. So clearly they're in this market, and they're trading this market by the looks of it. What does it take to become a crypto native? They've tested people. They said DeFi, DApp user, crypto's main source of income, or use crypto for payments, skin in the game, high wealth concentration in crypto, long-term alignment, good understanding of Bitcoin, and at ease with using crypto. Very, very interesting indeed. So it's strange. I would have thought that people would have had more money, that particular user, but clearly they don't. Okay, and why do we get into crypto? Because of the technology, clearly. And, China said yes at 54%. The differences between each country is quite amazing when you look at this. China's way ahead of the curve, and it doesn't surprise me. Also, people that are in crypto, they're more likely to be male. We know that, okay? I certainly know that. People get in there for the money. That's clearly the reason why. And, they get in there for, the diversity also, to not have to rely on the banks and to actually have the technology. Crypto users, they were asked, is it necessary to have an IT background? And, it sort of came midpoint. And basically, most of them were asked, where do you put your crypto? And most of them came out with a cold wallet, and then, what is it, 11% was a hot wallet, okay? So it's good to see people are putting them in cold wallets, which is great. Exchanges, they asked them about the important things of exchanges, and, it came up with this, mainly with security, UX, available trading pairs, no slippage, availability and compliance, which I thought was interesting, okay? And clearly, people's love of Bitcoin is still strong. So we'll probably see, that change. As I said, the Bitcoin dominance at the moment is 62%. That should come down to about 55%. Then it came down to other coins. But, clearly they love Bitcoin. I don't know why they love Tether. Tether is not a stable currency. It's not even US dollars, okay? They don't back 100% with US dollars. Bitcoin dominates most users' portfolios, or crypto users' portfolios. It certainly doesn't dominate mine, but it is a part of my investment portfolio because Bitcoin is the poster child and you need Bitcoin in your portfolio, okay? A lot of people were Bitcoin maximalists, which is, you know, surprising because the altcoins, I believe, will do really, really well. And, you know, 51% of people, you know, basically the 15% was their primary income plus additional sorts of income, okay? So they're probably working as well at the same time. And most of them saw this, you know, 48% of the general population considered crypto a hobby or a personal interest, which I thought was interesting. So let's just go through anything else interesting here. Financial freedom, people were looking at obviously financial freedom and independence. You know, some countries were way ahead of the curve than other countries like China, as you can see here, way ahead of the curve. Crypto users from China are less likely to use DeFi applications, but then they said originally South Asia was very strong for that, which that doesn't make sense at all. Low institutional trust, that doesn't surprise me, and depending on where you come from, there's even less institutional trust, and that's another driver for crypto, definitely. The general population has trust in crypto, 78%, but very low institutional trust. And it doesn't surprise me with banks and other institutions and monopolies and that sort of thing, like YouTube and, you know, Google and Twitter and Facebook and that sort of thing. Also, you do see that across different countries as well. Very much the same thing, okay? Very much the same thing. So it asks how much was crypto worth, you know, to people, and you know, people saw it as a good way to basically use disposable income to buy crypto because essentially you can make money out of it, and that's pretty obvious, I would have thought. So there wasn't much focus on operational risk, and they really need to focus on operational risk because operational risk in cryptocurrency is huge, okay? If you don't focus on operational risk, you could lose all your coins. You need, you know, again, I say this and I say this, if you have $100,000 of crypto, you know, you need at least 5 different wallets, okay? 5 different wallets. You know, we see time and time again, people get scammed if they have all their crypto in one wallet and they lose all their crypto. So in this survey, they should have asked about operational risk, and clearly they didn't, okay? And that's a big negative for this survey because operational risk is very, very high in cryptocurrency land, whether it's on the exchanges, whether it's on the wallets you use. If you've got a hot wallet, I mean, it's just high, okay? People are trying to scam you all the time. You've got to be careful. Don't tell people you've got, you know, crypto and that sort of thing, okay? So, also, what else to say? Can crypto adoptions meet its expectations? And, you know, basically strongly agree, disagreement or strong agreement. And most people said strong agreement to that. So there's this belief that crypto, you know, that the ICOs or crypto will do the right thing. And that's not necessarily true because the ICOs white papers aren't audited, okay? So they can effectively say anything, and that's a fact. Eventually they will be legislated, there'll be regulation, but, you know, this strong belief that crypto is good and anything coming out as good is going to bite a lot of people on the bum because literally there's 4,000 cryptocurrencies. Of those 4,000 cryptocurrencies, 97% are going to go by the wind in the next couple of years, okay? Crypto usage is still dominated by holding, and we are seeing that more with Ethereum and Bitcoin. Their holding periods are getting longer, and so are other coins as well. Also, we're seeing mega staking. We're seeing mega staking in Ethereum, 4.1 billion. We're seeing mega staking in ADA. We're seeing a lot of staking all over the place, and that basically takes coins and tokens out of the circulating issue, which means crypto will go higher just because of that, okay? Don't get into stable coins. There's no upside risk. There's all downside risk. These things are stupid. They're an index coin, not stable. They're an index coin against an underlying, like the US dollar. If the US dollar is going down, the stable coin is going down, even though it's one. It's indexed one to the thing that's going down, okay? It says they're liquid, but don't, just stay away from this. No upside. It's just silly, okay? Acceptance of new technology, perceived risk, perceived ease of use, and perceived usefulness. Now, you know, obviously if you don't know how to use crypto, what to do, it can be seen by the novice or people that are used in other markets as very difficult. okay? And it can be hard, and there's so many negatives to cryptocurrencies. So you've just got to make sure you know what you're doing, and you need to get educated seriously, because there are so many risks in cryptocurrencies, okay? Essentially, most people that are in this market are looking for alternatives, looking for alternative incomes. They're looking for, a wealth effect. They know there's a lot of risk, but they believe the return outweighs the risk, which it does. I mean, if you look at the Bitcoin Sharpe ratio, it's around 4, which is high. I mean, if you look at the equity market, Sharpe ratio, it's about 0.35 on the longer term history, and the gold Sharpe ratio is about 0.81. So cryptocurrency is a great investment for the unit of risk. For the unit of risk, you put in $1 of unit of risk, you get $4 return, which is fantastic. It's worth it. And I think, there's about 1.7% of people globally in cryptocurrency markets. That's going to get bigger and bigger and bigger, and it can only go further up, okay, as far as I'm concerned. This was from Binance, so very quick survey. I thought it was quite interesting, and I thought I'd bring it to your attention. Thank you very much for listening. It's Susie. Thank you, and I'll speak to you soon.